Good morning, everyone. So I'm joined by Jack Parker today, who's one of our tax specialists and co-head of our Powerbridge office, about the mini budget statement that was announced on Friday. We're going to focus mainly on the impact on individual and businesses in this session, but obviously there are some other news angles to this story. There's obviously the political angle, which is quite polarized, which we're going to avoid today. There's also the sort of the economic argument as to whether the budget will work in terms of achieving the aims stated by the government. But obviously the news cycle for the last 24 hours has certainly been dominated by the reaction of markets. So I think it's worth just giving a quick view on that. It's clear that there was a lot of speculative shorting of the pound. So markets were very volatile in the last 24 hours. They do seem to have stabilized a little bit, but the pound is still down significantly over the course of this year and looks to be continuing that trend. And government bond yields are also up. I think the key issue here really is that the Bank of England is facing a number of challenges. It's facing a challenge with the weak currency. It's obviously facing the challenge of inflation. There's the challenge of investor confidence and the challenge of the cost of government borrowing. So the Bank of England did release a statement yesterday. To be honest, it didn't really say much. It was a bit of an example of an organisation issuing a statement when they probably really didn't want to issue a statement. I think that I'm one of these people who has felt that the Bank of England was going to have to raise interest rates a little bit higher and a little bit faster than they have been. I think that is really what is surprising the markets. The markets are now pricing in interest rates to go up somewhere near 6%. The big challenge for the Bank of England is that raising interest rates threatens the housing market. If interest rates were to reach 6%, that would somewhat double the monthly cost of people's mortgages, and that is something that would clearly be problematic. My guess is that the Bank of England is staying somewhere below the US interest rate increases, with the hope that aggressive tightening by the US Fed will dampen global economic demand and push down inflation without the Bank of England having to follow suit. But Bank of England is going to come under a lot of pressure from the markets. And one of the reasons for that is that the UK is seen as the highest risk of the major economies. And I'll just quickly give the reasons for that. The US is obviously the reserve currency, so they can effectively borrow whatever they want. The other major economies in the EU are all part of the Eurozone. So there's some collective support there in the fact that they have a single currency. They don't have the same currency exposure that we have. And likewise, you've got in Japan, government borrowing there is supported by their net investment position, savings. Then you've also got China, which is somewhat off the table for this. So I think markets are somewhat pounding the UK, seen as the highest risk of major economies in the current environment. Probably the big bit of advice for clients and businesses on the back of that is to understand your exposure to variable interest rates. Clearly the Bank of England at the moment is reluctant to raise those rates quickly, but it may find itself in a position where it's forced to. So understanding your individual and business exposure to those rates, and that can include credit card rates, mortgages, borrowing. Even if you're on fixed rates, understand what the roll off of that is, and when you are likely to become exposed to those interest rate increases. If you need any help or advice on those issues, then contact your advisor. So let's just quickly, Jack, to the impact of the budget on businesses and individuals. So can you give us remind us of the headlines and what's been announced?
Yeah, so the bits we know that are 100% coming into force is we've got the 1.25% rise in national insurance, which came in April 22. That's being abolished from the 6th of November. So that's for both employees and employers' national insurance contributions. Aligned with that, then you've also got the 1.25% increase to the dividend tax rate, which was brought in to mirror that national insurance rise. That's disappearing from next April 23. Also from April 23, we've got the basic rate of income tax being reduced from 20% to 19%, and the additional rate of 45% being abolished completely. So anyone earning more than 150,000 will be paying 40% tax rather than 45%. Again, from April 23, the corporation tax rate was anticipated to rise up to 25%. That's now staying at 19%. You've also got some reforms coming in for IR35 for off-payroll workers, which we'll cover in a bit more detail a bit later on, as well as some announcements relating to the annual investment allowance, company share schemes, and the investment allowances. The stamp duty threshold in England has been increased and alcohol duty has been frozen. So it's quite a lot, actually. It's not a mini budget by any stretch of the imagination.
It is. There's more in there than I think we've seen in the budget for a very long time.
Yeah.
I think one of the things with this is that there's, I think we're used to with budgets there being a certain amount of sleight of hand in there, so that the government is sort of given with one hand and taken away. I think the point of this budget is it's fairly upfront, and I don't think we can argue that. So are there any other headlines or policies announced that we don't have the details for yet that are worth mentioning?
Yes. So the Chancellor's also announced an initiative to create investment zones across the UK. So those will be pockets of the UK that will benefit from accelerated capital allowances, reduced business rates, reduced taxes on employing staff. The details of those are still being announced, specifically as well how that will factor into the Welsh economy.
Okay, great. And so from the initiatives that have been announced that we know of, which businesses do we think will benefit the most from these effectively?
The most immediate benefit that any business will get will be on the national insurance reversal, because that's coming in November. So the biggest winners of those changes will be larger SMEs where their primary cost is staffing. So if you look at us as an example, our primary cost is our wages bill. So any reduction in the cost of employing staff is a benefit. Likewise, if you're a not-for-profit and you're very careful on your budgets, and your primary cost is your staffing cost, that's where you'll get a big saving. Conversely, then, if you're a manufacturing business where a lot of your work is automated and your main costs are your consumables and your machinery, there'll be less of a benefit for you.
Yeah, and so on that note, I guess which businesses are likely to benefit the least from these changes?
It'll be micro businesses that have no employees. So if you have no staff, if you're a one-man band sort of sole practitioner through a company, there'll be very little change in your tax bill from that perspective.
And aside from businesses, then what about individuals? What's the impact to individual taxpayers?
So employees will, and the self-employed actually, will benefit from that reduced rate of national insurance coming in from November. So those at the bottom of the pay scale, it's not a huge saving. It's £20–30 a year, up to a couple of £100 if you're much higher up that pay scale. The increase to the national insurance thresholds, which came in April 22, will stay in place. So compared with the last 12 months, you will still be paying less NI. And there's a potential that the reduced rate of income tax coming in next year from 20 to 19, again, that will benefit employees. But given that the personal allowances have been frozen and will be frozen for the next few years, the collective benefit is likely to be marginal.
Yeah, and so from a small business point of view or business owner point of view, is there anything that they should be thinking about immediately, or any immediate impact on decision making?
Yeah, well, as you said at the beginning, the inflationary effect on the economy is quite real at the moment. There's a cost of living crisis going on, and that is factoring into a lot of employers' decisions around staff bonuses, wage increases, and so on. So the increases to the decreases in the tax rates, the increases to the allowances, is something to bear in mind when considering those pay reviews, because it is an essential small bump to your employees' net pay, and it can factor into that wider conversation then.
The one thing we did touch on, Jack, was obviously the planned increase in corporate tax rate isn't happening. So we discussed whether there's any impact on sort of investment and capital expenditure decisions around that based on the super deduction that was in place.
Yes.
Is that the case, or does the super deduction still apply?
So the super deduction, there's not full detail on it at the moment, but the policy documents that the government have put out are that the super deduction will be reformed. So it's likely to be the case that you'll get the super deduction up until the date of the mini budget. Anything after that then will be under the normal rates. But something that did come in with the mini budget was that there's the £1 million temporary increase to the annual investment allowance is becoming permanent. So if you are a business that invests quite heavily in capital expenditure, there is still a chunky amount of tax relief there for you.
And on that, there were also some announcements on the share schemes and SEIS. Do you want to quickly touch on those?
Yeah, so for the share schemes, it'll only really impact a small minority of businesses across the country. So if anyone's planning to make use of those allowances, please contact us, contact your accountant to chat through it. But really what you're looking at is the seed enterprise investment scheme, which was the tax incentive set up for small startups. There's a lot of increases to the allowances, how much a company can raise, how much an investor can invest, how old the company needs to be, which is essentially then making it easier for those startup businesses to raise funds, which, it's part of the point of this budget is to boost British economy and, those startup businesses.
So do we have any additional view on these changes from a Welsh economic perspective or Welsh business perspective?
It's an interesting one because there are only for a 45% taxpayer, there's only around 9,000 of them in Wales, and the vast majority of those will be people that only just tip into greater than 150,000. So you've got council bosses, not-for-profit chief execs, that sort of thing. Compared that with 200,000 top rate taxpayers in London. So the reduction in that. The abolition of that 45% tax rate will have a clearly benefit more in London and the southeast rather than it will here. And it's true that all those reductions will benefit the higher paid more than they will the lower paid. And Wales has lower average earnings. It's got a smaller population on higher wages, so there will be less of a benefit to the Welsh economy from these changes.
Yeah, and then from obviously it's worth being aware that the Welsh Government and Senate has the ability to vary those income tax rates. Do we have any view on that yet?
Yes, so income tax is partially devolved in Wales, so we haven't got full control over what we do. So the 45% tax rate, because that rate has been abolished, that will flow through into Wales. So the 45% won't exist in Wales anymore. The reduction to 19% from 20% is something the Welsh Government could decide not to do. And it could be a political move by the Assembly in Wales then of what they want to do around that.
Yeah. Labour has obviously said that they will retain the 19% rate, but there could be a divergence from Welsh Labour on that policy.
Exactly. And I suppose my question for Welsh Government is, with part of these measures is to attract high earners back to the UK. So, with it, high earners coming back to the UK and potentially some Scottish taxpayers wanting to move south because the Scottish tax rates will be higher, what can the Welsh Government do to attract those people, those businesses to Wales?
Yeah, interesting. I guess the stamp duty announcement doesn't impact Wales, but is there likely to be any indirect impact?
It's not a huge amount. So land transaction tax is the Welsh equivalent of stamp duty land tax. It's completely devolved in Wales. So in England, the changes are that the zero rate band has increased from 125,000 to 250,000, whereas in Wales, the zero rate band is anything up to 180. So there's no indication that we would follow suit with increasing those thresholds, and there's nothing currently from the Welsh Government to say that they would. But what that means is that if you bought a house in Wales for 230,000, you'd pay £1,750 in land transaction tax, whereas you pay nothing in England. So it could have a small impact on retirees potentially looking to move across the border to Wales. But it's more likely that house prices in England will just increase to normalise that difference. So it's a bit like when we had the stamp duty holiday of, people didn't really benefit from that because people were paying much over the odds for properties. And I think we'll see something quite similar to that with these changes.
Okay. So I think the only thing we haven't touched on is the IR35 policy reforms and what that might mean. Yes.
So IR35 applies to individuals who provide services via an intermediary, so via their own company. So there were reforms in 2017 and 2021, essentially pushing the onus onto public bodies and private bodies respectively. So you had a lot of people working via companies for the NHS, for the BBC, where the onus was then on the NHS and the BBC to decide whether that worker was an employee or whether they were truly a contractor. That led to some issues where I think the BBC took a blanket approach of everyone was an employee, even if they were a true contractor. So these reforms reverse all that. So it puts the onus back onto the worker to decide, are they self-employed, are they employed or are they self-employed, and to tax themselves accordingly. So it helps reduce the burden on those public and private sector businesses so they can carry on, doing what they do.
Thanks for that. So I guess that sort of wraps us up. I guess the big, the big thing we're waiting for then is then more on the proposed investment zones. I think that the only thing that was contained in the budget relating to those in Wales was a statement that said that competition is currently underway to deliver the free ports programme, and that the government is effectively talking to the Welsh government around those. And they will be looking to use those discussions to further the idea of the investment zones. So I think we're essentially sort of waiting for more development. And I think that the idea of free ports and some of that is something that we will come back to at some point in the future.
Yeah, and I think that's it. As soon as we've got information on that, we'll put out an article just what it means specifically for businesses around the country.
Okay, excellent. Anything else you want to add? I mean, I guess the headlines have all been around tax cuts. I think for the majority of people, what this does is take them back to the taxes they were paying sort of 12 months ago, rather than any significant decreases to where we were 12 months ago, with the exception of that 45%.
So I think the only thing to be mindful of as well is that we've still got an actual budget to come in November. And the Chancellor has said that this is the start of more to come. So we can speculate about what that might be, but I've got a feeling that we've got some more surprises to come down the line.
Okay, excellent. So you'll be hearing from us again. I hope that was useful for everyone, and thank you for taking the time to watch us.
Yeah, thanks all.
Thanks.